Hello guys, how are you? How have you been? How is your week, man? How is your week? Because my week is good. My week is good. Actually, I'm recording this on a Monday. I'm not sure when I'll post it, but it will be midweek. I have to first post the video, my weekly breakdowns and all that. Today I just felt the mood to teach, so I said whatever. Fuck it, I'm gonna record a video and post it sometime this week, you know. And it just hit me like I was actually talking to a person, then I decided to record this video. Like he was like, trading is so easy. Why do a lot of traders lose money? Like everybody says trading is simple, but it's not easy. Why is that, man? Like, why do a lot of people lose money in the market? And that just hit me, and I was like, okay, let me see and make a video on it and see on why my reasoning. Mind you, that this is my understanding on why a lot of traders lose money. In the 4 years right now of being in the market, I've come across a couple of traders. A lot of traders have mentored traders. I've given signals to traders. Imagine, let me give you an example like right here. Imagine, for instance, I sent this in the free Telegram group, by the way. If you're not in it, the link is in the description below. Feel free to join. So imagine you can send a signal like this. Right now, the prices have broken above here. So I'm expecting to see prices give me a retest before they actually keep on pushing higher, right? With obviously my first targets at around here. Now, imagine this same very signal, I'll give it, let's say we can trade 2, 3 similar signals, the exact as this one right here, right? You can have 3 clients, each with $100 accounts. One, by the end of the day, he'll tell you, I have blown my account. The other one will tell you, hey, I just got $20. The other will be like, hey, I made 80 bucks. Same signal, same exits, not same exits. I gave the same exits, but maybe they took different exits, right? But at the end of the day, you all have 3 completely different results. Why is that, man? Why is that? So if you want to know the reasons that I believe a lot of traders are failing in trading, stick with me until the end of this video, as I'll be breaking down one after the other. Okay, so the first reason I believe a lot of traders are actually failing, contrary to what most people believe, is I think a lot of traders actually don't have the trading knowledge. Just pure fact, like a lot of traders do not really know what the hell is going on in the market. They really have no trading knowledge. Knowledge. Knowledge is written like this, right? I hope I didn't embarrass myself by misspelling or something. Knowledge, something like that. Okay, cool. So the first reason I believe is a lot of traders don't have that sufficient trading knowledge to actually say, hey, right now I can look at the market and I can know what the hell is going on in the market. You find a trader, let me give you an example. A trader is trading something like this, right? Maybe let's say prices were in some sort of range like this, right? Prices are in between ranges like this. So prices comes down here, it hits this support, maybe breaks this market structure, retests it, and then once it reaches here, this trader, based on the higher time frames, his analysis, whatever the reason, he believes that this market structure is going to hold. And therefore, once the trade reaches here, he takes a short, believing that prices will keep on going lower. This is the belief. This is their anticipation. This is what the trader predicts will happen in the market. But then instead of doing this, the market does what the market does. It breaks above it. And the trader was like, oh shit, now what am I doing, right? But instead of closing this trade early on, as soon as the market structure broke above here, the trader is like, oh, well, I'm gonna wait for it to reverse. I'm gonna wait for it to come back. And then the trade obviously broke the market structure. So it's most of the time going to retest it. So maybe let's say here it was around negative 200. Until it comes back here, it's around negative 25. The guy's like, okay, yeah, that's what's up. We're going back to break even. I'm gonna wait until it goes to 0 and then I'll close it. But after this retest, what happens? The trade booms back in its direction in which it was going. You find this person is now holding a loss of 500 bucks due to this it's just because that he doesn't have a trading knowledge. Now, if an experienced trader look at this chart here, he'll see, okay, I was like anticipating a bearish move. Prices came here, even if they gave me a little push in the lower side, but then at the end of the day, prices actually broke above this market structure. So that means that this market structure is no longer a resistance, but it's now a support. So once prices reach here, they aren't going to be looking to go short, but prices are going to be looking to go long. So I shouldn't be looking for selling opportunities now. I should be looking for buying opportunities. This is the very first thing that people don't have in the market. They lack trading knowledge. That's the first reason I believe a lot of traders actually are facing in the market right now, okay? And this applies in a lot of areas, not just market structures. I'm talking about tools like Fibonacci's, retracements, extensions, right? I'm talking about trend lines. I'm talking about reading the candlestick momentum, everything. I'm talking about the general trading knowledge about this. Like a lot of traders don't have that competent knowledge to actually say, okay, now I know what's really going in the markets because of this and this and that. I'm anticipating prices to do this and this. But a lot of people don't have that. They only based off what they hear in the trading groups, signals they saw on Instagram, whatever. They just do that, and then they lose money, and they go like trading is a scam. Well, I'm not gonna cuss nobody, but yo, that's up to you. If you didn't take the time to invest in knowledge, that's on you. Don't blame the Forex. Don't blame the market. The market does what the market does. The market is always right. Okay. So look for proper trading knowledge before you actually say, I'm losing money in the market and I don't know what to do. Look for proper trading knowledge. That's the first thing that you need to do. Okay. Now, second thing I see a lot of traders actually lose. Why a lot of traders actually lose is that given they already have the good trading knowledge, right? You find a trader goes his way, okay, he gets the proper trading knowledge to actually look at the market. So he comes back, is like, okay, hey, now I actually know the market structures, I know the trend lines, I know the resistance, supports, all that. But then it comes another thing. These people actually don't have a good risk management strategy. That's the second thing. Right? So you may have all that, like you may have the proper trading knowledge and all that, but at the end of the day, if you do not have a good risk management strategy, that's all going to be in vain. Because at the end of the day, it all comes down to your risk management strategy, right? So for instance, let's say this really happened in the market, right? And then prices did come here, and then they did go your way. I'm not saying they don't always go your way. So let's say they did go your way and prices pushed below here, right? So they did play out how you're expecting. How much are you going to risk here? Okay, some will say, I'm a risk 1%, I'm a risk 2%. Others don't even know about risking in percentages. All they know is that, hey, I'm going to trade with one lot. I'm going to trade with 0.01. I'm going to trade with 0.001. Like, that's gambling, my nigga. That's gambling, guys. Pardon me for the language, but that's straight up gambling. You can't really be entering in the market without defining your risk. You first have to define your risk before you actually even take the trade. So pardon me, I'm going to open my Black Forex Academy ebook real quick and show you guys something on risk management that actually will save your life. Because I believe people out there actually believe that, you know, while trading, they think that if they risk more, there's this saying that goes around like, scared money don't make no money. Yeah, scared money don't make no money, but then at the end of the day, you actually need to come down, double down on your risk. In trading, less is more. If you're risking less, you're actually going to gain more than if you're risking more, provided you're giving the same trading scenarios. Let's say a trader takes 10 trades, excuse me, 10 trades, and then 9 out of those, 7 out of those are winners, and 7 are losers, 3 are winners. The same exact strategy, 1:3, let's assume. Now, these people, exact same trades, exact same risk to reward ratios, but you'll be surprised at the end results. Let's say if one person is risking 2%, the other is risking, let's say 20%. The end result is going to bug you. Guys, it's insane. Okay, let me share the screen where I'm sharing my ebook. Okay, this is the Black Forex Academy ebook, guys. If you don't have it, make sure you do. It's the Black Forex Academy ebook. You can contact me via my Telegram. Also, if you join the VIP group, you get it for free. So it talks about a lot of things, harmonics, all that, right? Elliott wave theory, whatever. But down here, okay, we're talking about risk management. Now look at these two things, man. Like these two people asking, this one is risking 2% per trade, this one is risking 20% per trade. Same 1:3 risk to reward. This person actually loses 3 trades, wins 3 trades and loses 7 trades. This one loses 3 trades, loses 7 trades, wins 3 trades, exactly as the same person had left. But then at the end of the day, after 10 trades, this person will be up 3%, the one risking 2%, but the one risking 20% will be down 14%. Imagine that. So risking more doesn't mean you're going to win more. Even if we're using the same exact strategy, if you're risking more, in the long run, you might even end up losing instead of winning. So we might be trading the same system, the same exact entry signal, the same exact exit signals. But at the end of the day, if you're risking more, guys, I promise you, man, you are, excuse me, I promise you, if you're risking more, you might even end up losing more. So it's up to you guys. This is just free knowledge I'm sharing with you. So risking 2% is actually the good thing. Less is more, guys. If you want to be an aggressive trader, I'd say you risk from anywhere from 3 to 5. Anything more than 5, that's bad for your account. That's bad for your account. Imagine if you have a bad losing streak, like 10 trades, risking 5% per trade, you're already down 50%. That already affects your psychology. So it's, sheesh, it's going to be hard on you. It's going to be hard on you. Like at maximum, at the amount in which I risk at maximum is 3%. And that's if I spot an A1. An A1 is actually a trading classification that we have at the Black Forex Academy. So we classify our trades at A1, B2s, and C3s, depending on the probability of the market actually playing out. So the A1 is the most probable setup to actually go our way. So we always risk 3% on that. That's the most I can risk out of a trade. But other than that, I'm not going to be risking anything more than 3%. So that's another reason that a lot of traders are losing in the market. It can be the same strategy, the same entry point, same exit point, but at the end of the day, you still find the traders losing money. So this is one of the reasons that a lot of traders lose money, okay? Cool. So that's that. Another thing that I think a lot of traders actually another reason I find a lot of traders lose money is that they don't have a good trade management strategy. Okay. We are moving. Look, if you don't have a good trading strategy, trade management strategy, guys, I promise you, you'll never make it in this game. Especially now after the COVID hit. Oh my God, the markets have been insane. The markets have been crazy. That's no doubt. That is no doubt. Let me take you back to the markets. Look at this. The markets are most of the times consolidating. If you get one impulse move, it's pow. Like if you missed an entry up here, you missed it. It's insane. And then it starts consolidating again. Now, if you look, most of the times, this is what the markets are doing, consolidating. So it's actually, you have to be very smart and be able to capture even these small moves in between here, because it's a lot of consolidations. Now, these small moves, you can actually capture them, but you are going to be targeting for the higher, higher pips, higher risk to rewards. So let's assume, let's say you are trading the trend line strategy, and you said, I'm going to take my trade here. My target profits will be somewhere there. right? Let's assume this is what you're anticipating. Okay, my nigga. Why do I have that word in my mouth? Anyway, I'm African, whatever. I'm black, my nigga. So cool. So this is what's going on, right? So let's assume like you're already in this trade. It's a 2 ratio, 2.8. It's a beautiful trade. It's not a bad trade. Now, let's assume you're already in deep profits as so at around 120 pips. And you're like, yo, I want my trade to hit targets first. Nigga, like at a scenario like this, you gotta secure something. You gotta trade management is all about securing the bag. You don't know if the trade is going to hit your take profit. Ask a lot of mentors. If you're under the wing of any mentor, ask that person, do all the trades hit take profits? Most often than not, a lot of traders don't usually go and hit take profit. Most of the trades end midway. So why do you want to trade to hit take profit before you actually close it and secure the bag? That's not how it goes. First things first, what you need to do is secure the bag at least 50%. At least 50%. Go break even to secure your capital and then let the rest run. If this trade comes back and stops you out, oh well, you already made something out of this move. If it doesn't and it goes and hits take profit all the way, guess what? You even made more. So it's a win-win situation in either side. And at the end of the day, you'll find that most of the trades, since they don't hit take profit, you'll be collecting these small chunks. So let's assume today you collected $10. Tomorrow you collected another $10. The other day, 100, 200, small chunks. At the end of the day, at the end of the month, you find like, hey, these small chunks actually added up to $1,000. Now, $1,000, come on, man, come on. You can pass that up, right? It's money collected from small chunks of trades in which if you aren't managing your trades good, they could have ended at break even. So you wouldn't have made anything, but because you're collecting small chunks of trades, small chunks of profits, you actually made of $1,000. So it's not a bad thing. It's not a bad thing, right? So collecting small chunks of trades along the way, that's what's up. Like, look at this trade right here. So I expect, let's say prices will reverse and come back at around here at some point in time, right? But at the end of the day, I still expect to see prices to be bullish, right? So what I really anticipate is that I'll be seeing prices keep on going higher. So I'll expect prices to bounce off from here and then keep on going higher to around here. Now, that's what I expect, but the market knows what the market's going to do. So the prices might come here, break below, and then keep on going lower. So if I were in this trade, I don't want to risk that. I'm already up 120 pips. I might as well secure the bag. If prices come back here and then they give me another good entry opportunity, guess what? I'm gonna take another shot and go all the way up here. So it's a win-win situation, guys. So another thing which, as I was saying, that I see a lot of traders actually lose most of the time is they don't have a good trade management strategy. And this goes either way, in win sides and losing sides. Sometimes if, let's say you take a trade, let's have another example. Okay, this would have been bad. Trying to look for an example. Let's see. Okay, around here. Long position. Let's assume you took a buy at around here. Right? You're assuming prices will reach there because they bounced off this support area. Yeah, okay, right? You took your buy here, but the candle that you took the buy from, the following candle came back bearish. Let's assume your stop loss is anywhere somewhere below here, whatever. And then the following candle came back bearish. Now, in a scenario like this, what do? You're expecting to see prices keep on going bullish, but then the prices came back bearish. What do? Same thing as in profits. If the trade goes against you, you want to reduce the risk. So let's assume you're risking 2% and prices start going against you. Hey, close half the trade. Close half the chunk. You're reducing risk. Why? Because trades aren't going your direction. So you don't want to lose everything that's going to happen. Let's say you are risking 2%. If the trade hits stop loss, you don't want to lose the whole 2%. So you're going to close half the trade here. If in case it goes your way and then it stops you out, guess what? You didn't lose 2%. So you lost less than you anticipated. Okay. So that's the thing. It's all about trade management and risk management and trading strategy. I have a lot of theories on why a lot of people aren't profitable traders, but I don't think I'm going to be able to talk about all of them in this video either. It's going to be very, very long, and I don't want to do that. So if you'd like me to continue and produce another video like this, tell me in the comments below, yes or no, whatever. I'm listening to y'all. But if this video has been of help to you, smash that like button, subscribe so that you won't miss out on future content, and don't forget to share with a few friends that you believe maybe, just maybe, this is the trade or this is the video that will change their trading career. Just maybe, you never know. So share with a few friends, man. You know, sharing is caring. Peace and love. We grow together. This is a family. So don't forget to subscribe. Till next time, guys. I love the fuck out of y'all. Peace and love. Okay.